Hello, YouTubers, friends, compatriots, coolers, shills, desolators, peasants, vassals, dead peasants. I'm a useful idiot, and today I want to talk about what is known as dead peasants policies or janitor policies. But generally, they're known as dead peasant policies. And these are policies that corporations take out on their employees. And I don't know, this story isn't really on the radar right now. But it's an interesting topic to me because it's so bizarre. And for those of you who haven't heard of this or don't know all the details, this will be an interesting story because I've dug up a few details besides the expose a few years back that Walmart was taking out insurance policies on their employees. And that's the most notable example. But actually there's quite a bit more to it. So let's get to it. So for the past 35 years, big businesses, banks, and corporations have routinely and secretly been taking out millions of life insurance policies on their workers, naming the corporations as beneficiaries. And the policies are often in the hundreds of thousands and sometimes millions of dollars. And they actually keep track of employees who've left the company. And deaths are tracked through the Social Security system. So they're pretty diligent about this. And in 2006, Congress passed the Pension Protection Act, which basically codified the system. It gave some protections. Theoretically, someone is supposed to know if they are signing up for this policy. But, of course, oftentimes they don't really know what they're getting into or what exactly is involved. And the interesting thing about this, too, is that insurance also creates large tax breaks. So not only do these corporations take out these insurance policies, but they get a tax break on it. And the payoff is also tax exempt. And to give a little more history, the policies got the name dead peasants policies because that was the term used by internal memos from a case involving the Winn-Dixie stores. And back in early 2001, it turns out they had insurance policies, life insurance policies, 36,000 of its employees. And so they were the ones that coined the term dead peasant policy, which is rather interesting in itself. And there's no law requiring a company to reveal this to employees. You kind of have to ask or find out. And most of the information is not available in the public record, so I can't really find out how many corporations are doing this. And the banks report it, but corporations in general don't report it. But it's kind of interesting because Hartford Life Insurance estimated that 25% of all Fortune 500 companies use this practice, so about 5 million employees. But I would suspect that number is a lot higher because the Hartford Life Insurance obviously wouldn't have had access to figures from certain corporations like Walmart. So the actual figures are probably a lot higher. But it gets even more gruesome than that because, as it turns out, the life insurance policies are used to bankroll the benefits for their top executives. And a study by Hofstra University in New York found that Portland General, at the time a subsidiary of Enron, had created one of these corporate life insurance policy programs, and where the death of low-wage workers turned out it was funding the lavish compensation plans for top executives. The study actually says, quote, about 70% of an estimated $80 million in benefits from the policies pays for long-term compensation plan for managers, directors, and other top officers. The other 25% contributes to a supplemental executive retirement plan. Workers who had their entire retirement funds of hundreds of thousands of dollars wiped out by Enron's collapse were shocked to discover that their deaths will support benefit plans for the top Enron executives, unquote. And, of course, that's where it gets interesting to me. I knew about the Walmart program, and I knew about the dead peasant policies, but to find out that these policies are used to basically feast off the cadavers of their dead debt slave wage earners in order to boost the lavish packages of already overpaid executive officers. So quite a story there. And needless to say, this causes a great deal of moral hazard. A good example is one story from 2001. A Houston bank, Emoji, took out a policy on a Mr. Johnson and then fired him so he would lose his health insurance after several brain surgeries and ongoing chemotherapy. And then when he died, the bank collected $4 million on his death. And there's other stories, too, where employers are actually involved in murder plots against employees and former employees just to collect on their insurance policies. So I laugh, but this is actually pretty diabolical. And a 2003 study by the Government Accounting Office revealed that multiple companies hold policies on the same individual. So not only are there dead peasant policies, but multiple companies can have policies on one individual. So when a low-wage worker dies, if he's employed by several different corporations that use this process, then a lot of people are going to get wealthy off his death. So, the figures that are available, like I mentioned earlier, the Hartford Life Insurance estimated that 25% of all Fortune 500 companies use this practice. But one study alone showed that 3,209 banks had these life insurance policy programs, and the cash value was $56 billion in bank-owned life insurance policies, and that's not including the corporate owned life insurance policies. So there's a lot of money put into this, and obviously the profit margin must be rather large as it goes to bankroll the executive plans for these companies. So there you have it. There's a little synopsis on a crazy system that we have in this country where corporations can actually take out life insurance policies on their low-wage workers and cash in big time when they die. The payoff when the worker dies comes in and is tax exempt. And I also might add that this is quite an investment, because if you think about it, let's take that example of Mr. Johnson, who went through the brain surgeries and had a life insurance policy taken out on him by his bank. They got $4 million on his death. So needless to say, at these companies, it almost appears that in the long run, all these low-wage workers work for these companies for free, because let's say Walmart invests a certain amount in an employee over a certain amount of years at a very low wage, and the company has to shell out that money to pay that employee. And then when they die, the corporation, in this case Walmart, cashes in and probably gets most, if not all, if not more, than the money that they invested paying that employee all those years. So another level of irony on top of everything else. So there you have it. Anyway, there's the synopsis of the Dead Peasant Insurance Policy Program, aptly named. I'm a useful idiot. Don't you be one too.